So welcome everyone to another SES weekly status update. We're a little bit delayed today. Sorry about the technical issues, but yeah, today we're having Luca Prosperi as one of the core unit facilitators of the on the incubation program, and he's going to give a little bit more of an overview about the Lending Oversight Core Unit and explain how this is very important for the community. So yeah, Luca, if you want to take it away.
Yes. So again, not great to introduce myself as a facilitator, messing it up for the first 10 minutes, but I'll start. So great meeting you guys. I think many of you have already met me on forum or in presentations. So I'll try to skip many of the things describing the origin of our initiative of incubating a new core unit. But we're going to talk today about the way Maker does real-world finance. So now you know that Maker has truly the potential of becoming the pillar of DeFi. It already is. It's up to a certain point within crypto-native collateral, but it can actually expand its use cases beyond trading. So the intention of restructuring the way we do real-world, so-called real-world financing is to support this vision by helping the ecosystem mature and professionalizing internal checks and balances. As you know, the world of non-smart contract is more opaque and can actually bring additional risks to the DAO that can be existential to the DAO. How we haven't started doing real world finance today. So we have actually started doing real world finance under Sebastian's helm a few months ago, and he was instrumental in bootstrapping real world finance from zero to around 20 million DAI exposure that we have now. What was the philosophy? The philosophy was a bootstrapping philosophy. So engaging young crypto-friendly companies, often part of the MakerDAO community already. It meant also testing multiple approaches by talking with platforms like Centrifuge, direct asset managers, or direct companies, and trying to focus on a proof of concept. This meant that there were a few small exposures originated, sometimes of non-standard, slightly higher risk than what we wanted. But unfortunately, in bootstrapping phase, you need to test and you need to have a higher risk appetite if you want to get the ball rolling. But such approach had issues if we wanted to scale. Obviously, the credit quality was not the best. And Maker has this mindset of having an over-collateralized, very prudent approach to collateral. So we needed to improve the credit quality, making sure that we were not financing young companies, but we were financing companies or users of capital that were more conservative, also given the peculiar nature of the DAO to engage with those guys. It was difficult to scale because those companies, those creditors at the same time, they didn't have a lot of capital requirements. So it would have taken them a long time to scale, and it was not enough for Maker to just bring it to the next level. And the structure and the internal risk management was bootstrapped. So there are better ways to do this to protect the ecosystem. So that was the inception of SES-backed effort of improving the way we do real-world finance to scale this to 100 billion DAIs and not to 20 million DAIs. We need to change to do this. Nobody has ever done it before. It is difficult. So we decided to do this by improving coordination, i.e. having different points of contact within the DAO to avoid single point of failure, move towards higher, more scalable counterparties, larger, more institutional, often regulated, and continuing educating the ecosystem and improving the resilience of the protocol. So we had the fortune of being able to do that thanks to what the guys have done before us. Like a year ago, a regulated bank would have never sat at the table to talk with Maker. Today, a regulated bank, a large fund, a big company that has needs, actually is fascinated by DeFi and is ready to sit at the table to overcome the difficulties. So we did a few things, and I'll try to summarize it in the next few slides because I want to leave the space to describe what we're doing now and answer to questions. We basically revamped the funnel. So we have external counterparties that now can approach the DAO through different core units. Some core units focus on commercial and risk due diligence. Not every credit is the same. If you give a mortgage to a house, it's very different compared to giving an unsecured loan to a single individual. So other core units that are focused on legal, there are no contracts yet that bridge DeFi and real world. So a lot of stuff needs to be done that. And it's like a smart contract, a contract needs to be reviewed and vetted to make sure it's doing what we think it's doing. And other core units focus on the technological DD. And we added on top another layer that we called Lending Oversight. I love the acronym. I hope you guys like it too. That was acting as another point of control before token holders. Again, the decision, we don't want to be gatekeepers. The decision is always the community. It's always with the token holders. We just want to make sure that the holders get the best support and the counterparties as well. So we have here an exemplary collateral onboarding process. I don't want to go too much into the detail, but the idea is for the counterparty to, and please stop me if you have questions. I'm not seeing the questions because I don't see the chat. So the counterparties engage with the DAO. They can decide to engage directly with token holders, or they can engage directly with the core units so that the core units can help them shape the best possible MIP. And the core unit, in case there is this engagement, will provide a comprehensive assessment. The oversight core unit will double down with an extra independent assessment. And this package can go to the token holders. In this way, token holders can have the most comprehensive package of information made of the MIP and independent assessments from the core units, and they can take the decisions on whether they want to onboard something or not. Obviously, this assessment might not always be positive because we need to counteract. We are lenders and the others are borrowers. And in case it is negative, the core units would publish it, and it will still be in the hands of the token holders taking the decision of what if they outweigh the pros or the cons. So a few core units are involved. Real world finance core unit on the left-hand side is what already exists, although the mandate will change slightly. The collateral engineering services core unit that you see, number 3, already exists as well. And there are 2 more core units, one represented by me as a potential facilitator, the oversight layer, as I mentioned before. And the other one would be potentially facilitated by Christian Pedersen, that already works as a consultant for the DAO, which acts as a legal support. I'm not going to go into the detail of this because in the interest of time, I want to move to the next slide, more important, I think. But we are developing an incubator. Remember that is the facilitator of the World Finance Core Unit will help on this incubator because we want to decentralize. Now we have yesterday we had one real world finance core unit. Tomorrow we will have real world finance, legal, and oversight. The day after tomorrow, hopefully we will have more of each in order to avoid single points of failure or excessive power in the hands of few. We have started just 6 weeks ago. And although we are very bad communicators and we need to improve, a lot has been done. We have revamped the team, passing the control to the new facilitator of real world finance core unit. We have hired a completely different level of counterparties compared to before. So Jean is an example, but we've been engaged by several regulated banks, asset managers, structured credit platforms, crypto-native institutions that want to work with us because they see the potential. We are improving the structures and the legal structures that we want to use. Centrifuges MA of last week is an example. And we are improving the processes. This thing is difficult. It is never done before, and that's why we want to make this right before growing. So these are the steps, and then I let you guys ask questions, which is probably the most important part of the presentation. But we are now in the bootstrapping phase. So we started in phase 1 by re-engaging and sharing our vision, the so-called seed phase. We are now in bootstrapping phase, improving practices, attracting 3-5 top-notch counterparties that we can actually engage with and scale. Again, these counterparties, they come to us. It's not that we are reaching them. Thank God our maker name is already famous in the space. And we are doing a lot of work to improve the machine and make it ready for phase 3, which is the establishing phase. Now we have the right counterparties, we have the right processes, and we can scale. Phase 4, hopefully next year, will be a further decentralization phase. As I mentioned, I don't want to stay here for eternity. I want to pass the control to other people, and I want to pass the effort and the work to many other oversight core units. And we hope we can do that when we have enough business to justify. I've had here a few frequently asked questions about what we are doing, but I would like to leave the space for people to ask those questions, and obviously we will share this presentation.
I don't. Oh, I see one question. Did you check? Wow, it's by Frank. It's a long one, but before I get to that, Luca, can what we do with the on-chain assets is that different teams give their opinion, or they review them, they do the assessment, and then that is published in the forum. And we did have in the past comments with different protocols that they say, hey, instead of publishing something negative in the forum, why didn't you let us know before so we could fix these issues? So on the one hand, you have this, why do you almost shame us publicly? I don't want to say shame because it's not the intention, but it's spotting some things that for Maker might be red flags. So on the one hand, you have that, and on the other, you also want to let the community know of what's happening and what are some of the issues that you are finding. So what's a good way of balancing that, and at the same time not risking becoming like this central gatekeeper that has super powerful.
Yeah, I think it's a very important question. One, first of all, we don't want to be, and we will never be gatekeepers, meaning that any counterparty has several abilities to raise their hand if they think they dislike the way real world finance operates, through governance alpha, as we have seen recently, or simply directly going for a vote with the delegates. If they want to have the blessing, i.e., and the support as consultants of real world finance, obviously they need. There is no other way than engage with real world finance. You know, a process of onboarding of an asset off chain is complicated, because at the end the borrowers have interests and the lenders have interests. Those interests are one against the other. So the negotiations can be long, especially when there is a lot of money at stake and the legal structures are complex. In the interest of respect for the counterparties, we have been, and we mentioned them, that we have been very private in sharing our risk assessments with them, waiting for them to publish a very detailed MIP before providing a final risk assessment. This has been in good faith for the respect of them, although I think that a lot of because of the length of these processes, a lot of community members have been asking themselves, okay, what are these guys doing that I don't see any product? So we realized that this approach was not the right one. And that's why from now on, we are aiming at, yes, giving the time to the counterparties to remedy on what we see that we don't like as professionals, but then ultimately to publish after a certain amount of time, a week or 2 weeks in forums, so that the debate can be public and everybody can see what we're doing and can ask questions and chip in as well. So I think we've erred on the side of confidentiality in good faith. That was, I believe, a mistake. So I think now we will not move brutally on the other side, because we don't want to make forum worse. I think it would be unprofessional. But we will be much more systematic in sharing the work done with the community. So we will start from this weekend, where we will publish we are just checking that we are not breaching any non-disclosure agreement, but we will publish all the assessment we have already done with the counterparties in pipeline on forum.
Yeah, makes sense. So Elpro is asking on the Oh, and if anyone has any questions, feel free to click on ask a question and type it there. But Elpro is asking, what are the thoughts, and this is beyond phase 1, so more long-term ambition, in incubating a second Lending Oversight Core Unit, a second Real-World Finance 2.0 Core Unit. So what he's proposing is, should we have one more for institutional real-world finance and the other one more for private credit, so real-world asset startups looking to change the game? What are your thoughts on that?
I think it's a great idea. I think I've discussed this with Frank already. I think this is a pyramid, so there is some operating leverage. I think we don't need one legal entity, one legal core unit, or one oversight core unit for each real-world finance core unit. We can obviously scale. So I think starting from the base, I think there is a lot of merit in having a real-world finance core unit that is dedicated to startup managers. These startup managers obviously are less proven, higher risk, so probably the mandate in terms of debt ceiling could be different. But I think there is a lot of merit in having a core unit that is dedicated to that. I think at this stage, the oversight core unit can support both, but then obviously the ambition when business increases is to duplicate this oversight core unit as well in a pyramid approach. And myself personally, I just want to say that for me, it's an honor to work with MakerDAO, but I see my role at MakerDAO as a civil servant role. So I truly hope I have more than 15 years of experience in banking, and I hope that very soon the core unit will be mature enough for me to step aside on an advisory capacity or a part-time capacity, or even just as a community member, and leave the rest of the ecosystem mature independently from me.
And regarding the scale and the volume, so I think it was Will that published or that posted on the forum that to get a professional legal opinion for one of these deals is in the ballpark of 250K. So you need to make a lot of volume, or at least a lot of if it's not volume, it's like a high stability fee rate. So I guess that has to do as well, right, with making the deals profitable for everyone to be happy.
Yeah, I think there are some costs in doing this right. So there are fixed costs in doing this right, and I think the complexity, the time, and the cost to onboard a $50 million opportunity and a $500 million opportunity are not very different. This is why, consistent with Rune's arranger model, we are trying to attract larger counterparties. I think in finance, everybody's an arranger, everybody's intermediating something. So we need to attract larger counterparties, because obviously when the bridge is built with a larger counterparty, they have the volumes ready to scale and be profitable for us. This is the ambition. I just want to stress though, because I know a lot of people come from the world of smart contracts, that in the same way you will never channel hundreds of millions of DAIs through a smart contract that hasn't been audited by maker community, you wouldn't do that in the real world, and it's even more opaque. So the risk of the potential loss of not having a legal opinion and just dispersing the money is in the order of hundreds of millions of dollars. So I think this is why it is important, and I will always advocate rather not to do anything, rather than do something very small, but then probably not worth our time, rather than doing something very big without appropriate audit. Because again, lenders and borrowers, they're both in good faith, but they have different interests. So a borrower will bring their own lawyers and write their own contracts, and it's nature of negotiation that the lender brings their own lawyers as well, and the debate. If you leave a counterparty writing its own contract, you cannot be surprised that the contracts are not in your favor. And this is what we are trying to do. Obviously, not everybody's happy, and the fact that not everybody's happy, I think, is testament that we are doing a good job.
Hopefully that answers the question, Frank. Rockstar Cowboy asks, for counterparties, what do you see as the biggest value driver, and what's the biggest friction?
I think the biggest value driver is that Maker, in my mind, it's incredible because it is an infinite source of liquidity, because everybody trusts the DAI. People don't use the DAI for leverage. They use the DAI because they want to park their wealth in crypto in the DAI because they trust it. So the demand for DAI is huge, and the costs of minting it is very low. This means that we can be competitive in financing collateral that is of incredibly high quality. And it will be still profitable for us and help us diversify the collateral pool well beyond ETH. We could be backed by top-notch real estate, great company debt, very safe debt, and good people will be happy to take the junior loss, a bit the riskier capital, because they know that we can provide senior capital at very cheap costs. So everybody benefits. There are frictions though, because these guys never worked with a DeFi protocol. So the fact that they're starting to approach us now is incredible, but we don't speak the same language. And they have certain KYC and regulatory requirements that we are not necessarily happy to comply with for good reasons, because it's our philosophy. So striking the balance between the two, it is very difficult. And I'm sure it will be done, but it's not there yet 100%. I think this is the biggest friction.
Right. And Miguel asks, how do you see the future of real-world assets onboarded and the auditability and transparency towards the community?
So the future of, I think it goes back to the point. It goes back to the point of making sure that everything is done properly. Because of the nature of the DAO, we need to make sure that we need to provide the documentation and the structure that is as complete as possible. Because when we push start, it's too late to amend and remedy. And we are trying to create this in a way that is as systematic as possible, resembling as much as possible the world of smart contract. It can be done, because today you can buy exposure to loans as an individual through a security. You will never touch those loans, and you know that there is a system that protects you. So it can be done, but we need to that's the reason why we need to make sure that everything is done well at the onset in terms of legal structuring and monitoring rights, so that then we have the rights we believe, because later will be too late. And this is why we are trying to engage with counterparties that are high quality and they have all the technical capabilities already in place, proven for us to do that. Because we are lenders, so our return is we're not VCs. Our return is capped by the stability fee. So we need to see proof of concept and proof of ability, I believe, before disbursing money.
Nice. And Long for Wisdom has a question. I think you went a little bit too quickly over this, but it's regarding the risks parameters. So any type of parameter, including that ceiling, the stability fee and whatnot. So he asked which of the described core units, real world finance, legal, lending oversight, CES, etc., will have an input on the parameters while working with the borrowers. Are all involved, or are some purely part of the evaluation or implementation stage?
So I think the parameterization is mainly an activity. Everything should be co-led, but it's an activity that starts from real world finance, because the guys in the real world finance core unit will do the commercial and risk due diligence, so they can assess the risks and price them accordingly. And I think what is important is that the oversight core unit has a second opinion on whether those parameters make sense on a risk-adjusted basis. We don't, again, we receive. It is difficult for people that are used to invest as equity investors, right, or VCs. We will receive whatever the project does. If it becomes 10 times better or 1,000 times better, we will always receive the same amount of stability fee. So it's the same that happens for crypto collateral. So I think it is very important that we make sure that we are not on the wrong end of negotiation, where actually the borrower is taking incredible risk, because the worst thing can happen to them is just to lose our money and a little bit of theirs. But if the things go great, they can become immensely wealthy, but we will not get compensated by this asymmetry. So we need to make sure that it is a fair deal for both. And I think commercial risk should have the first say, and oversight should make sure that everything is done appropriately.
Great, thanks for that. Frank is asking another question regarding the sourcers. I don't know if that's even a word. The players sourcing the deals. Who do you foresee as the main players? Would it be growth, future Incubator, third-party outsourcing companies?
Yeah, so in an ideal world, we would have a dedicated team that does sourcing, because they make the relationships and they bring things in. Now, obviously, we don't want to duplicate costs and complexity before having business that justifies it. So now what we have been doing in the bootstrapping phase, in the seed phase, was to re-engage all the teams. So we speak regularly, Real World Finance talks regularly with growth, so that growth can onboard them to discuss with parties and make sure that they are legitimate. Oversight has a second opinion in this case. Myself, I've worked for 15 years in the business, so it is in my mission vision strategy that I would love to introduce players to the DAO to avoid avoidance of the doubt. I'm not talking about single players, but institutions with tens of thousands of employees. So for them, engaging with MakerDAO is insignificant from a financial point of view. But if that happens, obviously I will lead the rest of the due diligence to the rest of the team, and I would just want to use my experience and exposure in the system to show institutional players that now we are very well structured internally. But I believe that, and the most important thing is anybody can reach out to Real World Finance and ask to be considered as a potential borrower. So all these activities that we're doing now in terms of sharing our vision, educating, speaking with counterparties, is a way for us to show the world outside that DeFi is a place also for serious business. It's not only for degens. Maker is a very structured and conservative organization, although decentralized. So they should come at the table and talk to us. And we've been impressed by the fact that in the last month or two, we have had institutions of the caliber of Sogen, PIMCO, Fidelity, large funds in the US, large platforms like Crossland in Europe that do structured credit for banks, insurers, and large investors. They all reached out because they see the potential. So in the long term, we hope that we will have a dedicated team to do that. Now everybody is trying to chip in, but that's the reason why we are creating different layers of control and transparency to make sure there is not somebody just cooking the meal and eating it at the same time.
Regarding the institutional players, this is also a question from Frank. So how do we avoid that they back out in the last minute? Or maybe not avoid, but what's a way of mitigating that risk that the institutions will take many months or years to onboard and do due diligence, and finally they will back out? Is it to have a deep pipeline, or are there any other measures that we can take?
I think a deep pipeline is very important. That's why I think the first mile is the hardest. So a deep pipeline is very, very important. There are other ways we can test. That counterparty is serious. For example, that's also why the Real World Finance Core Unit is having pre-MIP conversations to make sure whether a counterparty is serious or not before engaging everybody else. There are other tricks that can be done. You mentioned before, Juan, that most of the legal costs are expensive. So we could ask a counterparty to bear some or most of those costs as a sign of commitment and to the risk the protocol. So there are a lot of things we can do to reduce the risk that we're just wasting time. But I think the combination is tricks to ensure incentive alignment, pre-screening, and parallelization.
Yeah, makes sense. I was wondering regarding the conflict of interest. I don't know if you or, well, actually this could be an open question for anyone within the DAO, but if there's a way of trying to avoid this conflict of interests. If let's say I don't know, I meet someone during the weekend that is interested, but I'm not getting anything out of it, and I introduce it to MakerDAO, like how should I disclose that? Are there any kind of like guidelines that we should follow in terms of disclosing conflict of interest and whatnot? I don't know if you gave it that.
Yeah, absolutely. So we shared already a methodology on forum a few weeks ago that describes a lot of the things we would love to see in a MIP, including disclosure of conflicts of interest or related parties involvement. That forum was didn't get a lot of attention and was not voted on chain. So we are transforming this forum post and expanding it a little bit on process into a MIP that should be published in the next few days before Wednesday, before the end of this cycle. And one of the most important things is the disclosure of conflict of interest or related parties involvement. It doesn't mean we cannot do business with companies that have large MKR token holders among their capital providers, but this requires enhanced due diligence to make sure that conflict of interest are avoided. So I think this is something that we will request. And also on the team side, if anybody in the team has even a minor relationship, financial or professional, with a counterparty, or if somebody in the team has worked with a counterparty before, we would ask them to disclose it, because we don't want to demonize the fact that we have these relationships, because finance is a business of relationships. The fact that PIMCO is happy to come and talk to us, it's because they trust somebody in the protocol that they can have a conversation. So it's not necessarily bad, but everything needs to be disclosed.
And a bit related to that, Mark is asking, how are we thinking about assessing counterparties regarding the debt ceiling? How many counterparties can we comfortably onboard at different SV levels? I forgot what SV is.
This is Mark AS?
I'm not sure, to be honest. Surplus buffer, right? It could be AS. I'm not sure.
No,
it is. It is. Okay.
Great question.
Nice to have you, Mark.
I think this is a question where we need to work in conjunction with Strategic Finance Core Unit, because now we are just working very hard to create this bridge and bring the best possible counterparties at the table, the most scalable, the safest, and the nicest we want to work with. So we're not really worrying about the size of the debt ceiling, because we're not at the negotiation yet. But then I think we will need to have a conversation with Strategic Finance in terms of dispersion of risks, whether we feel comfortable with a counterparty to have 50 million debt ceiling, 5 million, 500. I think it will depend on the general footprint of real-world finance. It will depend on the liquidity nature of the collateral. This stuff is not all super liquid, right? So we need to think about that, and or the maturity of the counterparty. I mean, I would feel comfortable in lending 100 million to a counterparty that is regulated as 100 people. I would probably feel less comfortable lending 100 million to a counterparty that is not regulated as one person. So I think it's a combination of things. We feel comfortable lending a certain amount of money to a counterparty that is doing receivable financing, where the receivables churn every 30 days. Probably if we want to lock this in mortgages that are 30 years long, it's probably different because there are some liquidity concerns. And I think this is one of the examples of a cross-unit collaboration between real-world finance and strategic finance. And we have a great relationship with Mark, so looking forward to work together on this.
Right, and just so it's on the video, SV was surplus buffer, and what Mark was saying is that So that the surplus buffer is what Maker uses in case any type of debt goes bad. So we could have different counterparties at different levels based on what the surplus buffer looks like at a different point in time. So yeah, just so that is clear.
Yeah, absolutely. But I think we need more surplus buffer to have this kind of conversation.
Probably. All right, so we are out of questions. I don't know, Luca, if you want to comment on next steps, what's coming, and what are the plans for the near future?
Yeah, I think next steps, we are working very hard, and our fault, we've been neglecting communicating enough with people that are beyond the core units. That is a unforgivable mistake. So we are aiming at having office hours on a weekly basis for everybody to chip in and ask questions. We, as the wider group of people working for Real World Assets, we are aiming at collaborating with any counterparty. So if any counterparty has questions, they can reach out directly, myself or Will, on forum. I mean, my handle is Luca _Pro. And we will be very happy to work and chat about what is possible to be done even before the MIP is submitted. And then it's going to be trial and error. I just want to say that we have a very open door policy. We're working very hard. We try to respect confidentiality, but at the same time, if anybody wants to engage, please feel free to reach out.
Yeah, absolutely. So yeah, for anyone else, our website is ses.makerdao.network, and the forum for the whole MakerDAO community is forum.makerdao.com. So we'll keep on the discussion there. Thank you, Luca, for coming. It was
thank you, and I apologize again for the technical difficulties the first 5 minutes.
We'll clip it and no one will ever know.
Awesome.
Have a nice weekend, everyone.
History. Thanks, guys.